Pretty flat picture today on the markets after those nice gains earlier in the week, and really all eyes on those jobs numbers out of the US this afternoon.
Absolutely, Stephen. I think yesterday jobless claims numbers, we all know that they were very much affected by the weather conditions in the United States that are prevailing at the moment. But the market opened up well this morning, basically based on what happened in the United States, where there were some broker upgrades also for Walt Disney, Boeing, and Coca-Cola, and also the small caps were rising. I think they were at the 17-year high yesterday, which gave hope to other traders that it will spread into the rest of the market, that kind of sentiment spreading into the rest of the market. That filtered through to Asia this morning, where we saw Japan closing in the black, and also China doing pretty well. The Bank of Japan saying that they're considering expanding their monetary policies and to help the Japanese economy. And we saw the yen react weaken there, and therefore making Japan more globally competitive. And then we saw in China there that the premier came out saying that he's also going to be they're also going to be looking at easing monetary and fiscal policies, or where they find appropriate. And also there's the brokerage shares went up there because there's news that there'll be index futures launched in mid-April. So a very, very good start in the market, and we've seen that filter through to our market as well.
Of course, just looking at some of that data yesterday in the United States, initial jobless claims dropped 29,000 to 469,000, so still pretty strong. Pending home sales, though, for January, down 7.6%, and that's a 10-month low. And of course, a lot of this being blamed on the bad weather. Do you think the bad weather could have an effect on people going out and looking for jobs when we see those numbers this afternoon?
Absolutely. If anything else, just blame the weather. But yes, I do believe that has had an effect. I think that, when you look at the numbers coming out today, these jobless claims numbers that came out yesterday, as well as the pending home sales, are more leading numbers. So I think the market has taken that into effect and into consideration in the expectations of today's numbers. And it's only if it is over and above what the market is already expecting that we'll see some positive moves there, and we'll see some stronger moves based on the United States data. But yes, the market has taken that the weather impact of it into current levels and expectations.
Because we've had some positive news coming out of Greece this week, and that follows lots of caution in that market. We had the austerity plan, which was underlined by the government on Wednesday. And of course, we've had that Greek bond issue, and it appears that bond issue has been well taken up. So there is still some appetite for Greek debt, and it could be a way out of its current problems.
I think what that has shown us really is that there is hope. It's brought a risk appetite back into the market, which we're all waiting for, and it's helped our markets and other smaller markets, especially on the currency side and also on the equity side. But I think the world was holding its breath, waiting to see what kind of reforms Greece will institute, and what kind of help the European banks would give, the European Central Bank would give to that ailing economy. And I think that has been very well received, but we still wait for more. It hasn't been really translated very much into the euro. I think, as we see, the euro is about at $1.36 at the moment, and whereas emerging market currencies have performed a lot better with the whole Greek reform. So it hasn't translated that much. I think there's still some trepidation there. People are still a little bit wary as to what is going to happen with Greece. But risk appetite is coming back into market, as we can see it on our side.
Of course, we had the rand trading at one stage this morning around 7.44 against the dollar, and this time last week it was recovering from hitting that 7.89 level. So we've seen some significant strength coming through for the rand over the past week. Of course, we have had commodity prices also ticking up quite nicely, so that, I'm sure, has been lending some support to commodity currencies like the rand.
Yes, it has. I think we have seen that filter through a lot of the commodity-based countries. And I think also the other thing is that, like I said earlier, risk appetite is coming back. I think the rand perhaps was a little bit oversold when we saw it reach around about the 780 area there. So it was a bit oversold, and now people getting back in there. And, risk appetite is what's really driving it, as well as commodities. But we're seeing that translated quite a bit into the rand at these current levels.
Of course, we saw some weakness in the currency towards the end of last month, and I think that's probably reflected in the golden forex numbers that were released by the South African Reserve Bank this morning. Did you take a look at those numbers?
Yes, I think the dollar has really affected SARB's accumulations there. We saw that the currency as well as the increase in foreign deposits from government is what brought the net reserves down in February. The only thing is that gold reserves went up not because of physical buying from SARB, but because the month-end price of gold had gone up. So yes, we have seen a major effect because of currency fluctuations and currency and the dollar strengthening against the euro and pound being translated into the net reserves for February.
Of course, we do have our reserves, gross reserves now sitting at 6.6 months import cover, and that's good news, and that should help support the rand going forward, shouldn't it?
Yes, it's very supportive of the rand in the medium to long term, and I think it's in line with international standards for emerging markets. So yes, that is good news, and it's what we are actually working for and hoping that can be maintained. But I think imports, were lower because of consumer demand and business demand there. But we've seen that translate to 6.6 months, as you said earlier.
Ntombenhle, would you like to hazard a guess on how the market might end the week?
Into Friday today, this afternoon?
Yes.
It really depends on the GDP numbers and the non-farm payroll numbers that come out of the States. As Alicia said earlier, we're just waiting. You can see that the market is waiting for those numbers to come out. So to hazard a guess, it depends on also, as I said earlier, on the size of the decrease in those numbers versus it reaching expectations. So I think I can't hazard a guess at the moment, but we would hope that it would be a little bit more positive. Maybe we end up flat or just above by 0.5%.